Welcome to the Aviation Insurance Podcast, the podcast that helps aircraft owners and aviation businesses learn and understand the complex world of aviation insurance and risk management. From the basic principles of aviation insurance to risk management techniques and updates on the aviation insurance market, the Aviation Insurance Podcast is your guide to traverse the world of aviation insurance. Now, here's your host, Tim Bonnell.
Welcome back to the Aviation Insurance Podcast, and I want to bring you another solo episode on an issue that's so very important, because today in aviation, whether you're an aircraft owner or operator, whether you're an aviation business, there are so many contracts involved with doing aviation, operating an aircraft, and so many of those contracts create liability obligations for another party. And so it's very important to understand issues related to insurance and those contracts and the topic of contractual liability. Today, I'll focus really on general topics on this subject about aircraft and aviation commercial general liability policies, as these are issues in each one of them. And I find even a lot of people in the aviation insurance industry don't fully understand this topic. Now, anytime we're talking about contracts or legal agreements of any kind, it is highly recommended that an aviation experienced and knowledgeable attorney is consulted to ensure that all legal issues are addressed and contractual issues are clear to you as the aircraft owner or operator. Aviation insurance brokers, insurance companies have an understanding in general of some of the exposures that a contract will have, but you'll find in this episode that there's so much more to it. So this episode, there's no legal advice being offered. I'm not an attorney, but I will be speaking about contractual liability issues from an insurance perspective. So always seek your aviation legal counsel when dealing with contracts. And so what is this issue? Well, there is a specific exclusion in every aircraft or aviation commercial general liability insurance policy. There is an exclusion that states that coverage does not apply to, or coverage is excluded for any liability inherited by the insured via the terms of a contractual agreement. So you have assumed liability you would not have had via a contractual liability or contractual agreement that you've entered into. And so that means several things need to happen in order to address it from a risk management perspective anytime an aviation contract is entered into. Now, there are certain agreements that many insurance policies will go ahead and include coverage for on a general basis if they meet the definition of an insured contract or otherwise outlined in the insurance policies. And these typically include things like liability you would have had anyway. So it's really, you would have had that liability, so it's not something new. Oftentimes, that definition of an insured contract will state, contract that with the municipality or government as it relates to the lease of facility or a hangar, or maybe even another party. It might include things like a sidetrack agreement and certain, specifications about having a rail come up next to your facility, which doesn't apply to most of us. And there's several other provisions, like even an elevator agreement. However, what we find most of the time is that most of today's policies include more than just a simple inheriting of liability due to the contract. So it's always advisable to proceed with sending any contract to your insurance company through your aviation insurance broker to ensure they are addressed. So what happens in the real world is typically, I'm an aviation insurance broker, so a customer will send me an agreement. They want me to make sure that it is approved by the insurance company, and we look at what are the minimum requirements and will the insurance company approve it. Well, there's a lot more to the issue than that. So many of these agreements will state that the contractee, the person, the aircraft owner, the aviation business, will agree to indemnify and hold harmless the other party to contract from any and all losses that occur as a result of the operations of the contract. So to indemnify means that party is going to pay any losses occurred to the other party that they incur as a result of this party's operations. And so an indemnity is that promise or guarantee to pay those losses they will incur out of the operations of outlined in the contract of that operation. So the challenge with an indemnity is most of them are indefinite. There's no time limitation and there's no financial limitation. And that gets tricky because a lot of times there's also minimum insurance coverages that are outlined in that contractual agreement. So a lot of people think, well, my policy coverages meet these requirements, so I'm good. Or, they may think it's been approved by the insurance company, so I'm good. Well, at the end of the day, it is so very important to remember that an insurance policy cannot cover all of the obligations that an insured, so the aircraft owner or aviation business or airport, inherits in an indemnity agreement, since indemnities are unlimited most of the time in the financial amount of indemnification or in the time. Insurance policies have maximum limits of liability or coverages, and they have policy effective dates, so that coverage comes to an end. And so it's important that these coverages are addressed. However, it's also most important to know anytime you're involved in reviewing one of these agreements that indemnification clause that's not limited in the amount of total indemnity required or in the time frame required, that there's a lot of exposure that's just not able to be insured via the insurance policy contract. So there are several ways to go about addressing these issues. You can always check the definition of an insured contract in that specific policy to see if it meets the requirements of the policy to not be approved. But most of the time, again, these aviation contracts are complex. They require a lot of things. So the best practice is always send it to your aviation insurance broker for them to submit to the insurance company for approval. Now, there are several ways an insurance company can address the obligations of the contract. Okay, so one of those is to insure the indemnity itself. And that can be done by adding and specifically scheduling that contract to contractual liability endorsement. That endorsement just says that any contract scheduled to, and again, this is general terms, not a specific contract wording, but just for an example, any contract scheduled to this endorsement is hereby, picks up the coverage of that agreement, of that indemnity only, under the terms and conditions of the policy. Now, here is something very critical. Anytime a contract is approved, it's always subject to the limits of coverage, the terms and conditions of the policy. So if a loss falls outside of the terms and conditions of the policy, so it's not a covered loss, or if the loss exceeds the limits of the insurance, that contract, all those exposures end, right? So anytime a contract is scheduled to a contractual liability endorsement saying policy of coverages now apply to this contract we've scheduled into the policy, there is always needs to be that understanding that coverage only applies up to the maximum limits of coverage and all the terms and conditions of the insurance policy. A huge point to remember. So typically, if you're having to schedule a contract to an agreement, there is a reporting period. The insurance company will normally state that this coverage will apply if contracts are reported within 30 or 60 or whatever the time frame the policy states. So anytime you enter into an agreement, it's always the best practice to do it in advance of the policy going to an effect to ensure that coverage issues and risk management issues are addressed before entering into the contract, because there could be additional premiums. You could discover that certain things will not be covered, and so it's better to know that upfront rather than after the contract has gone into effect, or even worse, after a loss occurs. So they can insure the indemnity only, saying we will insure the indemnity obligation up to the terms and conditions of policies and the limits of coverage. So ensuring the indemnity addresses that, but leaves open all those exposures that fall outside of the insurance policy. Another way that some carriers prefer to do is just to make the contract party who is requiring the indemnity agreement an additional insured. Okay? So an additional insured is a party who is not an insured on the policy, who has the coverage extended to them via the insurance policy. So they become another insured on the policy. Now, it's important to know, very important to know, that when someone becomes an additional insured, it does not increase the limits of liability. In fact, it just dilutes the limits of liability because those parties, the named insured, the additional insured, and any other applicable additional insured are all sharing the same limits of liability. So there's less of the limit available the more additional insureds you have. So it's always important to consider that and to remember that your limit of liability may be lower if you have a number of additional insureds on that policy. It gives that other contract party access to your insurance policy, dilutes your limits, and any loss that applies to that will certainly affect the loss record, the claims record, deductibles, insurance renewal premiums of the insured. So there's certain disadvantages of making another party an additional insured, whether or not it's applicable to addressing an indemnity requirement or otherwise. So that is just absolutely fundamental to remember. Typically, for the insured, the best thing to do is a combination of insuring the indemnity and an additional insured status. That offers them the best protection and keeps the best situation with the party they're entering into a contract with. Typically, those are built on positive relationships that you want to keep positive. And so having both of those things, requirements met, is important. There may be other requirements outlined, such as a waiver of subrogation or a lost payee, if it is an aircraft lease, for instance. And I won't go into all those things in this episode, but it is important to know that in a contract, be aware of all the insurance requirements outlined and to get that approved in some form or fashion from the insurance company. Note, if you see on a piece of paper that contractual liability is mentioned, you want to really understand what it is spelled out, what that coverage is spelled out. On some aircraft insurance policies, the insurance company will state there is, in fact, contractual liability on this policy. However, it will often only apply to a military or government contract, and really it addresses the items typically required in a DD 2400 or the form and coverage needed to be evidenced that an aircraft has insurance applicable to allow them to land at a military type of airport. So you got to understand, even if it says you have contractual liability, some insurance companies really limit the scope of that coverage. So we can insure an indemnity, we can just make someone an additional insured, or we can do that combination, which is referred to as a belt and suspenders approach, where there's a combination of insuring the indemnity, scheduling the contract onto the contractual liability endorsement, and some large operations may have a blanket type of coverage where any contract can be approved. That's getting more and more rare given the complexities of these aviation contracts and all the risks that it entail. But in one form or fashion, it should be scheduled to the insurance policy to ensure contractual liability. It can give additional insured status to that other party, and hopefully that will address the concern from that perspective. But always know that that coverage for that contract, insurance coverage, only is applicable to the terms and conditions of the policy up to the maximum limits of coverage, while you're still diluting that coverage with multiple insureds. Typically, most insurance policies today have a separation of insureds or severability of interest clause, which says each insured will be treated like it's the only insured in the event of a loss as applicable to a legal defense. So while everyone's sharing the same limit, everyone should have to be provided with their own legal defense. And that can come with other issues, but it's important to note that that's part of the process. Now, at the end of the day, most of these contracts, one requesting the coverage, one requesting the indemnity, is going to require a certificate of insurance to ensure that they know the coverages that are being added or included on the insurance policy to address this indemnification requirement or all the other requirements that they may have. Something very, very important to note is that anything on an insurance certificate must be on the aircraft or aviation CGL insurance policy. Certificates of insurance merely evidence coverage. They don't extend the obligation of the insurance company. They don't offer new coverage. They just evidence coverage. So that's the key thing for aviation insurance brokers who may be doing a certificate, certainly insurance companies, that any coverage outlined in a certificate of insurance must actually be covered and listed specifically in the aircraft or aviation CGL insurance policy. Otherwise, there's going to be a number of issues for everyone involved, lack of compliance for the customer or the insured, and then all kinds of other major consequences that could come from all parties involved if a certificate is not properly issued and those coverages on the certificate aren't actually on the insurance policy. So this is a very vast topic. There's more that goes into it. So I really just wanted to hit on those major issues and the fact that indemnification, any other type of agreement that are entered into by an airport, an aviation business, an aircraft owner, they often inherit liability they wouldn't have otherwise had. And there's often requirements that sit outside of what is insured under the policy. So getting that approved with the insurance company in whatever form or fashion that the policy requires or allows is very important. Making sure to remember that insurance coverage doesn't cover all indemnification obligations. It's important to know that. It's important to communicate that to all parties involved. Otherwise, there could be some very unhappy people when a claim occurs that involves this indemnification obligation. So that is kind of the nutshell, the quick Reader's Digest version of contractual liability, knowing what certificates of insurance do and do not do, and understanding that just because there's minimum requirements outlined, that doesn't mean that's your minimum exposure under the contract you're entering into. It's important to know what you're getting into when you're entering an aviation contract or agreement of any kind, and it's important to know what insurance does and does not cover. Otherwise, there can be a lot of unhappy people in the process. So that's the gist, the high-level 30,000-foot overview of contractual liabilities and issues involved with insurance regarding to aircraft, insurance, aviation or airport, general liability insurance, and a very important topic, very important to know. A lot of people don't understand it. So if you want to know more, you can dig into it in different ways. There's different resources out there, and we'll have one coming in the very near future from Aris Insurance Solutions as well, and myself. That's all for this episode. Join us again next time as we continue navigating the waypoints in aviation insurance. Until then, enjoy clear skies and unlimited visibility.
Thanks for listening to the Aviation Insurance Podcast. If you found this episode of value, please share it with someone who would benefit from this information. Don't forget to subscribe in your podcast player so you don't miss any new episodes, and to help our show have more impact. This episode is brought to you by Aris Insurance Solutions, your flight plan for navigating the turbulence of aviation insurance. For more information, visit arisinsurance.com. That is www.aerisinsurance.com. Disclaimer. These episodes are for educational purposes only, and due to the changing regulatory and legal nature of the business, some information may change over time. Having a well-educated and experienced aviation insurance broker on your team is an absolute requirement to success in business and for managing your aircraft and aviation business risks.